Welcome back. A newly formed work group is aiming to position Singapore as a private capital leader. The goal is to close the gap between private funding and public listings. Singapore's Central Bank Deputy Chairman Chee Hong Tat says companies can benefit from more diverse sources like private capital. Ivy Chok with this report.
Amid a tighter funding landscape globally, Singapore is moving to strengthen its enterprise ecosystem. In his budget speech, PM Lawrence Wong announced the new work group to drive the strategy. The aim is to develop the private capital market. This will also reinforce traditional modes of financing like bank loans.
We need to also look at the entire value chain, see how we can support the companies who are coming in at the earlier stages and who are growing in the earlier stages before they are ready for listing. This private capital, the private markets, I think it's a useful complement to what the banks are doing through their lending and also what the public markets can offer.
Mr. Chee notes that as bigger and more exciting opportunities appear, such as those in the high-tech space, Singapore needs the right people and systems in place. The work group aims to plug existing gaps in capabilities and resources to better support these up-and-coming firms. Mr. Chee says one potential area that the work group plans to look at is the ecosystem to support startup founders both in Singapore and abroad to raise capital here. Another area is infrastructure. That's as economies here in Asia continue to industrialize, driving up large capital needs. The team will study the full value chain of financing. It starts from creating and leading deals to making it easier for firms to raise money. It will also ensure that funds stay in Singapore, get reinvested, and continue to grow with time. Mr. Chee will lead the work group. It will comprise of 15 other members from the public and private sectors. They include investment giants like Goldman Sachs and BlackRock, state investors GIC and Temasek, as well as agencies such as Enterprises Singapore and the Economic Development Board. Market watchers say this move will help mid-tier investment firms and companies in the high-growth sectors.
It is the mid-tiers that will really benefit from more direct access, where the government has such private and public collaborations that bring together the potential pipeline deals. When we can achieve all of these, it will then help to meet the other stated objective by the working group, which is for the capital to be recycled in Singapore.
Various sectors that, maybe has not been quite as heavily invested and should actually deserve a lot more funding, whether it's bio, health tech, and in quantum computing. I think it's interesting because there's a lot of news already on AI and the valuations are getting quite frothy. And I think there is a lot of opportunity in climate and energy transitions.
The work group aims to complete its review by end 2027.